Hello, everyone. Bigbear.ai, ticker symbol BBAI, is once again making serious noise in the market. As of right now, the stock is trading live around $7.15, marking a strong intraday surge of nearly 6%. The trading volume is absolutely off the charts. More than 128 million shares have already exchanged hands, shattering the company's average daily volume. Clearly, there's a massive wave of new interest pouring into this name. At first glance, it might look like just another day in the red-hot artificial intelligence sector, one more AI stock catching a ride on the hype train. But in reality, there's a very specific catalyst driving today's explosive move, one that could have long-term implications for how investors view Bigbear.ai going forward. So what exactly happened? Early this morning, the company announced a major milestone. Bigbear.ai has officially completed a full-scale deployment of its Veriscan biometric identity platform at Chicago O'Hare International Airport, one of the busiest airports in the entire world. This system is being used to support U.S. Customs and Border Protection, marking a huge step forward in the company's push into real-world commercial applications. This isn't one of those fluffy AI press releases filled with buzzwords and vague promises. This is a hard asset deployment, a functioning technology product rolled out in a live, high-traffic environment. It's proof that Bigbear.ai's software can operate at scale, and that's something the market has been desperately waiting to see. Now, the story around Bigbear.ai has always been fascinating. Investors hear the name, see the AI tag, notice its ties to U.S. defense and intelligence contracts, and immediately think, okay, maybe this is the next Palantir. The comparison is natural. Both companies deal with data analytics, government contracts, and AI-driven decision-making systems. The idea has been that Bbai could be a small-cap version of Palantir, a hidden gem sitting on a pile of government partnerships that the market hasn't fully priced in yet. Many retail traders jumped in on that narrative, believing they were early to the next big defense tech story. And that belief has been powerful enough to fuel several explosive rallies, followed by equally painful pullbacks. But here's the truth. Most people miss. Bigbear.ai isn't a one-dimensional AI moonshot. It's a dual identity company, caught between two very different business models. On one side, you have the legacy government contracting division. This is the side that lands huge-sounding contracts, like the $165 million U.S. Army Global Force Information Management Project. Those headlines sound amazing. But government work is slow, often delayed, and notoriously inconsistent when it comes to profitability. Payments are spread out, margins are thin, and red tape slows everything down. We saw the impact of this earlier in the year when Bigbear.ai reported its Q1 2025 earnings. The company reaffirmed its full-year revenue outlook of $160 million to $180 million, which sounds solid on the surface. But the details told a different story. A GAAP net loss of $62 million, and, perhaps more concerning, a negative adjusted EBITDA of $7 million. That's deep in the red. It means the company is still burning cash, something investors hate to see in today's high-interest rate environment. And that brings us back to the O'Hare Airport deployment. This project represents the other side of Bigbear.ai, the commercial biometrics and digital identity business. Unlike slow-moving government work, this segment has the potential for recurring, high-margin revenue that could finally break the company's dependence on federal contracts. In simple terms, this O'Hare deal isn't just about an airport. It's a proof of concept that Bigbear.ai can compete in the private sector, that its tech can handle real-world environments and scale commercially. That's why today's surge in price and volume is so important. It's not just another AI hype move. It's a fundamental shift in perception. The market is realizing that Bigbear.ai may not just be a defense contractor with an AI label. It might actually be a company capable of building competitive, scalable tech for global use. If you zoom out, BBAI's stock performance tells a story of volatility and emotion. Over the past year, it's been an absolute beast, up hundreds of percent, outperforming roughly 98% of the entire market. It swung between a 52-week low of $1.51 and a high of $10.36. But lately, the momentum cooled off. The stock has been consolidating in a wide range between $6.30 and $9.40, with frustrated investors waiting for a fresh catalyst. Today's rally is that spark, a bounce off lower support fueled by real, tangible progress. The big question is this the start of a new leg up, or just a one-day wonder? Now let's dive into one of the most misunderstood parts of BBAI's story: short selling. Because of its popularity on Reddit and other social trading platforms, a lot of retail traders believe Bigbear.ai is some kind of meme squeeze candidate, a heavily shorted stock waiting to explode. But when you dig into the actual data, the picture becomes much more nuanced. According to platforms like Fintel and S3 Partners, short interest currently sits around 18.4% of the free float. That's significant. Roughly 1 out of every 5 shares available for trading is being used to bet against the company. So, yes, there are plenty of bears. However, the days-to-cover ratio, which measures how many days of average volume it would take for all shorts to close their positions, is just 0.64 days. That's very low. Anything under 1 day means shorts can exit easily without triggering a panic. A real short squeeze requires 5, 10, or even 20 days to cover, not 0.6. Then there's the borrow fee rate, the interest shorts pay to borrow the stock. For a heavily shorted stock under squeeze conditions, this can skyrocket to 100%, 200%, or even more. But for BBAI, the rate is just 0.69%, practically free. That tells us brokers have plenty of shares available to lend, and there's no shortage of supply. Put those together, high short interest, low days to cover, and low borrow cost, and you get a clear conclusion. This is not a trapped short position. The bearish traders betting against Bigbear.ai are doing so based on fundamentals, not fear. They believe the company's cash burn and profitability challenges will eventually pull the stock lower. In other words, this isn't a meme squeeze setup. It's a tug-of-war between optimists betting on growth and skeptics betting on survival. Now, there's another piece of the puzzle worth watching: the failed-to-deliver (FTD) data. These are shares that were sold but not actually delivered on settlement day. In late September, BBAI recorded spikes in FTDs, including 1 day with more than 1.8 million undelivered shares. That doesn't automatically mean manipulation, but persistent FTDs can indicate stress in the stock's trading system, especially during volatile periods. This divide between bulls and bears shows up everywhere, especially online. On one side, you've got long-term holders comparing BBAI to Palantir, arguing that Bigbear.ai analyzes data while Palantir merely organizes it. They see the $165 million Army contract and the new O'Hare deployment as validation of the thesis. On the other hand, skeptics point to the financials: the $62 million quarterly loss, negative margins, and sluggish revenue growth, as evidence that this is just another AI meme stock burning through cash with more hype than results. So who's right? Let's look at the ownership structure for clues. As of the latest filings, there are over 400 institutional investors holding BBAI shares. The biggest are the usual giants: Vanguard with nearly 21 million shares and BlackRock with over 20 million. Their presence means Bigbear.ai is part of the major index funds, giving it a stable ownership base. But what's really interesting is who else is in the mix. Citadel Advisors with about 6.4 million shares and Renaissance Technologies with 5.5 million. Those are two of the most sophisticated quantitative hedge funds in the world. Their involvement tells us that Bigbear.ai is a playground for algorithmic trading and high-frequency strategies, which explains the wild intraday swings we've been seeing. Looking ahead, everything now depends on whether Bigbear.ai can convert today's momentum into financial progress. The upcoming Q3 earnings report on November 10th will be absolutely critical. Investors aren't just going to care about revenue. They'll be watching two specific things: cash burn and adjusted EBITDA. Can the company show improvement and move toward profitability? Commercial traction. Is the O'Hare project just a one-off or the first in a growing pipeline of real-world biometric deployments? Right now, Wall Street analysts are split. Some they've price targets as low as $1.50, implying a total collapse. Others see as high as $8.40, suggesting stability but not explosive upside. The consensus is technically a buy, but with very cautious optimism. That uncertainty mirrors the broader investor sentiment. Everyone sees the potential, but everyone's also worried about the cash flow. So let's end on a question for you. As Bigbear.ai trades around $7.15, do you believe this company's future lies in government defense contracts or in the commercial biometric sector that's now showing real progress? Drop your answer below. Type GOV if you're betting on defense, or COM if you believe the commercial side is where the future lies. Because at the end of the day, Today's rally isn't just a price move. It's a reflection of a company standing at a crossroads, fighting to prove that its technology isn't just smart, but scalable, profitable, and here to stay. This is not financial advice.